Well, hello everyone. This is Wilson Cole, and I'm president of Adams, Evans, and Ross Backdoor Hires and Elite Global, and I am joined on a full-length webinar with our general counsel and attorney and my lovely daughter, Samantha. Samantha, how are you doing?
I'm well. How about yourself?
Doing fine, doing fine. Sam, what I want to talk about today, and we're in the very beginning stages of this lockdown with the coronavirus, and the economy is in full free fall, and clients are scared. The whole world is scared for the virus. The economy is kind of a 1-2 punch. And by them doing the lockdown to squash this virus, it will make it, in essence, it's going to kind of extend out the problems. So what I've had a lot of clients say, Wilson, when will I know how quickly should I turn over an account? What should I be doing now? And so what I did was I went back, because we did a webinar years ago, probably back in 2013, 14, after the financial crisis had kind of ended and we were on the uptick. And I wanted to share with everybody interesting ideas on why companies go out of business. And everybody thinks, well, gee, sales are why I'm going out of business. And there's many, many, many reasons. And then share with them the number one reason. In this particular environment, the top 10 reasons are almost amplified. And so what I want to do is kind of get with, let me come over here and let's see if, here we go. And so, as everybody's sitting around here, I think everybody's going to recognize some of these problems that they didn't have 2 weeks ago and now that they do. But here's the number one challenge that everybody has is, they're going to say lack of sales, cost of marketing, employee turnover, retention, economic conditions, government regulations, or competitors. Now, all of these are factors, but according to a 2012 study conducted by the Small Business Administration, businesses that are over 5 years old, so we're not talking startups, we're talking about seasoned businesses, will fail because of these top 10 reasons. Number one is, government regulations, overseas pressures, death of an owner, loss of key employees, lack of profit margin, lack of sales, poor systems, loss of credit lines, poor credit decisions, you grew too quickly, or the undercapitalization. Now, 75% of all businesses will fail within the first 2 years of business. So if you're dealing with a new company and, one of the things that our client said is, when should I know that I have a problem? Number one, any company that you're dealing with right now that's less than 2 years old, in the best of times, are going to fail 80% of the time. So if you've got a new company, you want to make sure that if they're behind or they miss any payments, that whether you utilize us, utilize anyone else, you get us involved. Now, one of the ways to help mitigate these circumstances is use personal guarantees, become a secured creditor, charge interest and late fees, and litigate in your own backyard, which is a jurisdictional clause. And Sam, I know that we have different thoughts based on the different scenarios. But Sam has talked a lot about jurisdictional clauses from collections. It can be a double-edged sword, but one thing that is always true, and this is what Sam just preaches about every time she's on a webinar or on the phone with a client, is get a signature on a contract. Not to say that we couldn't collect without a signature, but without a signature, it makes it infinitely more difficult. Samantha, with the background that we have right now, getting a signature is, in my opinion, one of the utmost importance. Kind of go over, even though you can have a meeting of the minds, some of the benefits that signature is going to give you that if we didn't have it, wouldn't be.
That signature takes away any risk of he said, she said.
Okay.
Of, well, did they agree to 25% or 20%? Was it going to be one price for a salesperson and one price for an executive? Those
Was
things,
it a 6-month possessory period or a 12-month possessory?
exactly. It allows for everybody signs off on the exact same things.
Okay. So it eliminates any confusion and puts you in a much stronger position. You know, and one thing that I think, especially if you're over on the staffing side, recruiters are the first ones to get hammered in a downturn. Let me tell you where it's insanely dangerous for our staffing clients right now is companies are contracting, they're running out of cash. That's going to only get worse. What they will do is they will go to a staffing firm and they say, hey, I want to go ahead and I want to hire 10 temporaries. And in essence, they are shifting the responsibility of that payroll from their books to your books. So if a total stranger called and asked to borrow $10,000, you need to treat it as though you're, you know, the same way as if somebody were to call and say, hey, I need 3 or 4 temporaries, or I want you to do my payrolling, especially if you're extending credit. Before this downturn, we had one of our clients get $400,000, $500,000 into payrolling, and there's no doubt in my mind that the company was having some issues, and they just, in essence, acquired a $500,000 loan from that client, and they masked it as payrolling. They'll do the same thing with staffing. Understand when companies, even when the economy picks back up and they want to start gearing up, and it's a great opportunity for staffing firms or people that are placing contractors because it's peak business is going to accelerate. You just need to understand, is it a peak business because you've done such a great job of marketing, or is this company wanting to shift that risk over to you? There's three types of categories that you need to take and categorize your clients into. If it's a legally publicly traded company, unless it's an Enron, you're going to probably get paid. If it is a large regional company, there again, you're going to probably get paid. You still need to look. But the small mom and pops, 500 employees and under, is what is defined as small business in America. These are the ones that you need to make sure that you're diligent on, because they can have circumstances change. Their credit lines dry up. You know, and also you need to make sure that you don't treat them all the same. Publicly traded company, give them, you know, as much cash as you deem necessary, or cash, extend as much credit, but understand that that is a much different scenario than if you have Bob's, manufacturing, where he's got 10 employees. Bob may be a great $5,000 credit risk, but he's a horrible $50,000 credit risk. You want to set credit lines based on the worthiness of the client versus their needs. You need to have a system in place. And we teach a webinar, I taught for years, on how to set and maintain credit lines. And we're going to talk a little bit more of that in other webinars. But understand, you need to set credit lines to be defensive. The thing that I can recommend everybody start doing right now to speed up your cash flow is stop using the term net 10 days, net 30 days, and don't put due upon receipt. Instead, put a specific date. If today is March 1st, then you want to say, if it's 15 days or 10 days, you want to say payment is due March 16th versus net 10 days. Net 10 days means 30. Net 30 days means 45 to 60. And due upon receipt means whatever they want it to mean. Put a specific date. Another thing that you can do to speed up cash flows is use friendly reminders. When they're 1 week out, send them a green postcard that says, hey, our terms, we had an invoice due last week. It wasn't paid. If you would pay it. If they don't pay it in 2 weeks, then you send out a yellow one that says, hey, I sent you out an email, or I sent you out a notice. We need payment. And then a month later, 2 weeks later, you send out the red one. You send out a collection letter series. A collection letter series is an automated emails that go out, And that combined with the phone calls are going to work amazingly well. The key is to let them know that they're past due in a recession. It's a key anytime, but it's amplified now. You want to be the squeakier wheel. The one thing that I'm telling all of our clients here is, and this is one thing that we're offering to the entire staffing industry, is if anybody is over 60 days, we'll pull a free credit report at no cost to you whatsoever. Because especially right now, as the economy starts to tank, companies that have been around, that have cash reserves, have client goodwill, they're going to survive the downturn. The companies that have been paying everybody poor for the last 10 to 12 months, they're going to absolutely evaporate. So if you email me, wilson@aercollections.com, give me the name of the company, the name of their address and phone number, and put in the subject line free credit report request within 48 hours, because we're inundated because of this economy right now with this free credit report offer. Give us 48 hours, but we'll let you know if a company is truly behind, or if they are just working their way through this downtime. The issue is speed. And like I said, if a company has been paying their bills, I can't stress enough, if they've been paying their bills poorly for the last 10 to 12 months, those are the companies that are not going to survive. The one thing that I want you to do right now, since you've got the time, go through and audit all of your paperwork, all of your systems, your clients. Make sure you have your agreements in order. If sales are a little slow right now, spend time doing the projects that you've been putting off. This is one of the things that you need to do, is make sure you have that signed agreement that Samantha and I had talked about. Make sure that you set up credit on all of the ones. Third one is set up, over the next month or so, go through and set up credit lines based on what you've seen, and set up a system for ongoing client checks. The key is, don't be abusive, but you want to be aggressive on these things. Over the next few months, when the economy does start picking up, make sure you use personal guarantees and become UCC secured creditors in that way. Samantha, take a moment and explain to our clients in very layman's terms what a UCC is and why that's important.
A UCC gives you a claim into the assets of the company. It's very much, your mortgage company has one on your house. It gives you a claim that if things go bad, the company files bankrupt, it puts you in the top tier of creditors in getting paid. Whether that be you get paid first, whether that be you get paid at a higher pennies on the dollar, whatever that might be, it puts you in the best position to get a recovery for if they go bankrupt.
And the way that a UCC one works from a practicality standpoint is whoever files it first is almost like a mortgage holder of a first mortgage holder. Whoever files it second is second mortgage holder, and so forth and so on. And so you want to make sure, as this economy does start to improve and things start moving up, that you practice common sense and better practices. We're coming out of an environment that if you were in staffing or recruiting and couldn't make money, you probably didn't need to be in it. This is going to be the third downturn that fourth downturn. I've been through 3 downturns in the past. And the clients that survive are the ones that set up these systems, because buckling down the hatches, if you're in pretty good shape right now, you're going to ride out this coronavirus downturn. My concern is when you start seeing that uptick of business demand, clients are going to be so ecstatic and they start being so desperate for cash that they start making poor credit decisions, which becomes the number 2 reasons why companies go out of business. So what you want to do is you want to set up a system that is automatic. So going into it right now is phase 1. Phase one is to make sure that you identify clients that have always paid you slow. They're the ones that aren't going to survive. Statistically, they're going to evaporate. If they're behind now, whether you utilize us, whether you utilize someone else, you need to take action quickly, because even if they don't pay you while everyone's on lockdown, when it comes off a lockdown and business starts maneuvering again, they've dug even a deeper hole, and you want to make sure you're at the top of that list. As you go through and you're having this slowdown, go through, build some systems, check, make sure you have all the contracts signed, make sure you have credit reports on your existing clients. If you want to sign up for credit reports going forward, then we've certainly got some specials on that. The free credit reports that we're offering, and it's just because of a volume thing, we cannot offer free credit reports on anybody that isn't 60 days or further behind. But pulling credit, 3 trade references, especially if you're in the staffing side. Can't stress that enough. And then if you're in the staffing side, or if you're doing contracts to where you're the one actually covering the funds, or even if you're getting funded and you're guaranteeing that. So keep in mind, with a lot of these funding companies, they're funding all your payroll, but you're the guy that's on, or the lady that's on the line. If that deal goes bad, in essence, you're co-signing for all of your clients. That's in essence what you're doing. So make sure that you're a secured creditor with your creditor, because if you're using a funding company, one thing I can assure you without a doubt, they're a secured creditor for you. If you go and pull a UCC1, they filed that UCC1, you want to make sure on your bigger clients, and bigger clients would be whatever you couldn't afford to lose. There's no guarantees extending credit even becoming a secured creditor, but it reduces the probability, and if they go to sell, they have to pay you all first and things on those lines. Your funding company is secured by you. They're not. You want to make sure that you're secured on your client the same way that the banks and funding companies are doing you. Set up a system to speed up your cash flow. I can't stress that enough. It literally, we're in uncharted territories. You need to make sure that there's no ambiguity to your contracts, and Sam and I are going to be doing some more webinars on that, but you also want to make sure that there's not any confusion on when you that's why you get rid of the net 30 days and put a specific date. Samantha, any particular things that you want to add to this before we sign off? And anybody that's out there, if you have a client that's over 60 days past due, let's pull a credit report to see if they're bad, or if you give them the next 2 to 3 weeks to weather the storm. Speed is of the essence. Samantha, any thoughts on your end, and any suggestions for our clients out there?
I think this just comes back to what you were saying of when we pop out on the other side of this, don't go rush full speed ahead to try to regain the time you lost and get sloppy about paperwork.
And that's going to be key, because the ones right now, everybody's scared, everybody's buckling down the hatches. They're going to survive it. My concern is when we get on the other side, everybody's going to open up the floodgates. And that is where, if you don't practice good credit and collection risk, that's where you're going to get slaughtered. And that's where, out of every recession, the recruiters that can't find the backdoor hires go out of business on the front side. The staffing companies get obliterated by extending credit too soon and too much as the economy works or starts to build back up. Everybody be safe. And if you have any questions, or if you have a collection that you need our assistance on, you know how to get in touch with us. It's down there on the screen as well. On top of that, if you have I can't stress enough, we're offering free credit checks on any company that's under or over 60 days past due. If you have any questions, give me a call.